In this video, I want to share with you two exciting ETFs that I like for safe and premium rich weekly income selling put options in October 2025. I'll explain exactly why they're my two goes, how I approach selling puts on them, and some key risks and considerations that you should be aware of. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'd love to help you out. So before I jump into the actual ETFs, let's take a look and see what's been happening with AMD. So earlier this week, AMD announced a landmark deal with OpenAI, igniting AI market optimism and propelling AMD to new highs. So let's take a look and see what happened. On October 6, 2025, AMD and OpenAI unveiled a multi-year, multi-generational agreement that stipulates that OpenAI will deploy 6 gigawatts of AMD's Instinct GPU for its next generation AI infrastructure, beginning with a 1 gigawatt deployment of AMD Instinct MI450 GPU in the second half of 2026. This deal, valued in billions, as having the potential to generate well over 100 billion in revenue for AMD in the coming years. Additionally, AMD also issued OpenAI a warrant to purchase up to 160 million shares of the AMD stock, potentially granting OpenAI a 10% stake in AMD. And obviously, the announcement triggered an immediate and dramatic response from investors, with AMD shares soaring 26% in pre-market and exceeding 30% that day. So with that jump, as of October 9, 2025, today AMD market cap now stands at almost 376 billion. So if we check out AMD's chart, it's up 92% year to date, and in the last 6 months, it's up 140%. Now, right after that announcement, AMD jumped from $164 right close to about $235. And along with that, we also saw some analyst upgrades in the last couple of days. We had Jefferies upgrade AMD from a $170 price target to a $300 price target. And just yesterday, we had Goldman Sachs upgrade AMD from a $150 price target to a $210 price target. So if we look at AMD's 6-month chart, right now it's at the very top of its Bollinger Band. Obviously, with that big jump up, the Bollinger Bands have now expanded. And for those not familiar with the Bollinger Bands are a technical analysis tool that I utilize to help me determine when to enter and exit positions. Generally speaking, anytime a stock jumps out of its Bollinger Band, you will see that it pops back under the Bollinger Band in the days to follow. So again, knowing that AMD is trading the very top of the Bollinger Band, I expect a pullback soon. So, this is probably not the ideal conditions to sell puts on AMD given how extended it is. So I would wait few days and a slight pullback to, enter into a position to sell put options on AMD. But hypothetically, if I were to sell put options at AMD, let's pull up the options chain, and I'm going to go out 1 week to the October 17th options chain. And then basically, if you look at the expected move with how much AMD is extended at the moment after that news, the expected move is about $20 from the current price. So subtracting $20 from the current price of 233 brings us close to the 213 strike price. Now, we don't have a 213 strike price, but we have a 212.50 strike price, which is a 16 delta, which I like. Anytime I like to sell put options, I generally like to target a delta of anywhere from 15 to 20. So keeping the expected move in mind, the 16 delta aligns with my risk profile. So if I go and sell one put at the 212.50 strike price, right now I would collect a premium of about $210, and to sell one put option at the 212.50 strike price would require a collateral of about 21K. So obviously, if you're a small account of $5,000, $10,000, or even $15,000, it's probably not possible for you to sell one put on AMD. So instead, what you could do is actually sell puts on AMD's 2x leverage ETF, which is AMDL. So I'm going to go ahead and pull up AMDL right here. So I'm going to use the same options chain, which is about a week out. If we go with the $17 strike price, which is the 16 delta, we would collect about $37 in premium. So if we go with this leverage ETF instead of the actual AMD stock, because this leverage ETF is only priced at about $21 and we're going with the $17 strike price, which one options contract lets you control 100 shares. So if you were to sell one put at the $17 strike price, it would only require $1,700 in collateral to sell one put option. And again, AMDL gives you 2x leverage to the daily movement of the AMD stock. So keep that in mind because it amplifies AMD's movements, whether to the upside or to the downside. Another thing to keep in mind when selling leverage ETFs that the bid and the ask spread is generally wider compared to the actual stock. So keep that in mind when trading leverage ETFs, as again, the bid and ask spread is not going to be that great compared to the actual stock. So with that said, if you look at the actual return on your capital, if you go with the 16 delta right now and sell one put option at the $17 strike price, your return on capital is about 2.2%. Versus if we sold put options on the actual AMD stock, it required about 21K in capital and it was giving us about a 1% return, which is obviously not bad. But again, if you're a small account and you go with AMDL instead of the actual AMD stock, then you could collect a 2.2% return on your capital, which if you do it 4 times a month, then that's almost close to a 10% return, which is absolutely fantastic. Now, another ETF that I really like for weekly income selling put options is NVDX. And for those not familiar with NVDX, NVDX trades for about $20. NVDX is also a leverage ETF that gives you 2x leverage to the daily movement of the NVIDIA stock. If you look at the NVDX brochure, they go on to say that NVDX is the first 2x ETF for NVIDIA in the United States. Obviously, I wasn't aware of that, but now that I'm aware of it, it's a great ETF and trades for about $20, which is fantastic for somebody with a small account. So let's go ahead and look at NVIDIA and see how NVDX lines up against NVIDIA. So if I look at the NVIDIA 6-month chart, it's currently trading at the top of its Bollinger Band, like a lot of stocks in the stock market right now. At the top of the Bollinger Band is a great place to sell covered calls. But hypothetically speaking, if I were to sell put options on NVIDIA right now, if I do this for weekly income and I want to sell put options on NVIDIA, I would like to target the middle of the Bollinger Band, which is this $181 strike price. So let's pull up the options chain and see how that looks. I'm going to go out a week because I like to sell weekly options in most cases. So we don't have 181 strike price. We have 182.50 strike price or 180 strike price. So I like the 182.50 strike price. It's an 18 delta, which is quite fair. And again, that just means that there's an 18% chance of the stock reaching to this strike price by expiration. And then if you look at the return on capital percent, it's about a 0.7% return on capital. That adds up to about 2.8% monthly return. So not bad at all. And then, if I were to sell one put option at the 182.50 strike price, right now I would collect a premium of about $1.30, which equates to $130. But to sell one put option on NVIDIA at the 182.50 strike price would require a collateral of $18,250. Even if you're a small account with a 20K balance, I wouldn't recommend anybody put their entire portfolio into one position, even if it's the best stock in the stock market. So keeping that in mind, let's pull up NVDX and see how that lines up against NVIDIA. So if I look at NVDX, again, going out 1 week to the October 17th options chain. Now, because this is a leverage ETFs, I'd be a little more cautious on the delta. And actually, I don't mind going with a slightly lower delta of 16 on this one. So that would be the $18 strike price. So again, if I were to sell one put option at the $18 strike price, that would give us about $22 in premium. And for that, I would only require a collateral of $1,800. So now, again, if you're a small account, that is absolutely fantastic because this leverage ETF tracks NVIDIA, which is a solid stock. And even with a small account, you are able to sell put options indirectly on NVIDIA. And if you look at the return on capital, this strike price is offering us about a 1.27% return on capital, which again, if you times it by 4, that's easily over 5%, which is absolutely fantastic. So that's it for today's video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.